So, when you hear Kodak moment, what flashes through your mind? For many, it's probably, cherished family photos,
Yeah,
a
yeah,
comforting slice of nostalgia.
yeah, exactly. But today, we're going to kind of pull back the curtain on that iconic phrase. There's a much deeper, more cautionary tale, really, lurking beneath the surface of that brand.
Right. Our deep dive today, it goes far beyond just the simple story of Kodak's downfall.
Uh-huh. We're here to show you that its collapse wasn't, well, it wasn't primarily a technological failure. It was actually a profound breakdown of leadership, organizational culture, and frankly, imagination.
And crucially, we'll then pivot and apply those incredibly hard-won lessons directly to the artificial intelligence revolution it's unfolding right now.
Exactly. This deep dive is really designed to give you a kind of strategic roadmap.
We want to highlight how those exact same dynamics,
Yeah.
complacency, the fear of losing your existing profitable businesses,
Hmm.
and just a shocking underestimation of how fast change can hit.
Yeah.
They're emerging all over again with
Sorry,
AI.
bro.
And more importantly, we'll equip you with actionable insights so businesses don't just survive this new era, but actually thrive.
Yeah, prepare for an illuminating journey. We'll move from this historical case study to concrete strategic tools. You'll uncover some surprising facts about one of history's biggest corporate failures, and hopefully leave with practical ways to navigate your own AI moment.
Okay, so let's start by unraveling the story of Kodak's fall. It really is a cautionary tale for the ages.
It is.
Imagine Kodak in its prime, founded way back in 1888 by George Eastman. This wasn't just some camera company.
No, not at all. It was an empire built on what we now call a brilliant razor and blade model. Hugely profitable, recurring revenue from selling film, chemicals, printing paper, the works.
And this model worked, spectacularly well.
Oh, absolutely. At its peak, what was it, 1997? Kodak commanded something like 80 to 90% market share, market value of $31 billion. And their slogan, right? You press the button, we do the rest. It just perfectly captured that seamless, integrated ecosystem, made photography accessible for everyone.
Yeah, and the phrase Kodak moment itself became totally synonymous with capturing
Mhm.
memories. It wove the brand deep into the culture.
Deep. But it's fascinating, isn't it, how a company's greatest strength can also become its biggest vulnerability.
Yeah, tell me about that.
Well, that razor and blade model, Kodak's huge strength, it essentially became a strategic straitjacket
Mm.
because digital photography, it's a one-time hardware purchase. There's zero recurring film revenue. It fundamentally contradicted Kodak's entire business structure.
So their past success became like golden handcuffs, made it incredibly hard to pivot.
Exactly, golden handcuffs. And here's where the irony just gets truly astounding.
Okay.
Kodak's own engineer, a brilliant guy named Steven Sasson, actually invented the world's first digital camera way back in 1975.
75. Wow. What did it look like?
Get this. It was the size of a toaster. Took 23 seconds to capture one low-res black and white image onto a cassette tape.
Ah, sounds clunky.
It was clunky, definitely. But it was a working proof of concept, a clear glimpse into the future, right there in their own labs.
And they didn't just stop there, did they?
No, they kept pushing. Developed the first megapixel sensor in 1986. Accumulated over 1,000 digital imaging patents.
1,000 patents. That kind of intellectual property. It should have given them an unshakable lead in the digital age.
It absolutely should have. And that's the critical distinction you see. There's invention, creating something new, and then there's innovation, successfully bringing something new to market and actually creating value from it.
Right.
Kodak was brilliant at invention, absolutely brilliant, but they failed spectacularly at innovation.
So that huge treasure trove of IP, what happened?
Mismanaged, just totally mismanaged. It was eventually sold off for, what, a mere $527 million during their bankruptcy? Peanuts, really, considering what it represented.
Wow. So if the genius was in the lab, what blocked it from reaching the market? Where was the breakdown?
The core flaw wasn't in R&D, it was squarely in the boardroom. Leadership knew about digital tech, they saw it, but it was almost like they couldn't figure out what to do with it.
A real disconnect.
A profound disconnect between their own groundbreaking research and the company's core strategic direction.
Which brings us to that crucial question. Why do giants so often seem to choose stagnation?
Yeah, it's a pattern. The common narrative for Kodak's paralysis is that management simply feared digital photography would cannibalize their hugely profitable film business.
Right. Protect the cash cow at all costs.
Exactly.
Wow.
They saw this new tech as a threat to be managed, maybe suppressed, rather than a massive opportunity to seize.
And this is where Clayton Christensen's innovator's dilemma comes in, right? That whole good management trap.
Perfectly illustrates it. By the conventional standards of the time, Kodak's managers were actually acting correctly. They listened to their biggest customers.
Who still wanted film.
Right. They focused on high-margin products, invested in sustaining innovations making film better rather than truly disruptive ones. Early digital. It was low quality, low profit, seemed totally unattractive to their core market.
But it wasn't just strategy, was it? You mentioned culture.
Oh, absolutely.
Yeah.
Beyond strategy, there was this deeply ingrained organizational culture. We're talking, well, arrogance, a real risk aversion.
A belief that they knew best.
Totally. A belief that they knew best what was good for consumers. They just ignored market signals, even internal warnings, clinging to this idea that people would always want the touch and feel of printed photos.
And the bureaucracy didn't help, I imagine.
Made them far too slow, too rigid to adapt. Bureaucratic structures just choked any agility.
So even when they finally did try to enter the digital market.
Their efforts felt, well, half-hearted. Poorly executed. They just severely underestimated how fast consumers would actually shift.
Like that Advantix system you mentioned.
Yeah.
The digital camera that still needed film.
Exactly. A bizarre compromise. Cost them a $500 million write-off. They fundamentally failed to grasp that they needed to build a whole new digital ecosystem, software, image-sharing platforms.
Like their competitors were doing.
Precisely. They missed the ecosystem play.
And what about external pressures? Shareholders.
Yeah, that definitely compounded the problem. Shareholder expectations for those consistent high returns from traditional film, well, shifting to a capital-intensive, initially lower-profit digital business.
The market would have punished them in the short term.
Absolutely. It created this awful damned if you do, damned if you don't situation for the leadership.
It's really stark when you compare Kodak with Fujifilm.
Oh, it's incredibly illuminating. Fujifilm was their direct contemporary, their main competitor. Faced the exact same existential threat from film's decline.
But reacted completely differently.
Couldn't have been more different. While Kodak was hesitating, Fujifilm's CEO, Shigetaka Komori, made some incredibly decisive moves.
Like what?
He aggressively cut costs in the shrinking film division, sure, but crucially, he heavily invested in R&D to find new applications for Fujifilm's core competencies.
Okay, so redefining what they were good at.
Exactly. They stopped seeing themselves as just a photo company. They realized, hey, we're actually a global chemical engineering company.
Interesting.
They understood their expertise in preventing color fading in photos using antioxidants. Collagen had direct applications to slowing skin aging.
Which led to cosmetics.
Bingo. Their wildly successful Astalift cosmetics line, and they smartly leveraged their film and imaging tech to get into profitable medical equipment and healthcare markets too.
Wow. While Kodak was.
Kodak's diversification efforts, in contrast, were scattered, unfocused. They were investing in kind of unrelated businesses, not really leveraging their core strengths, wasted attention, wasted resources. Their digital partnerships were just too little, too late.
The outcomes tell the story.
Clearly. Kodak. Bankruptcy in 2012. Fujifilm. Continuous growth, continued profitability. It's just a powerful testament to visionary leadership, defining your core competence broadly, and having a culture that embraces proactive diversification and, frankly, radical restructuring when needed.
Okay, so that's the history lesson.
Yeah.
Powerful stuff. How do we then apply that to what's happening right now with AI?
Well, first, we need to understand that the disruption we're seeing with AI it's profoundly different from past tech shifts.
Different how? You mean like Netflix versus Blockbuster or Amazon versus retail?
Exactly. Those primarily changed business models and distribution channels. They altered the how and the where of doing business.
Okay.
But generative AI, it's shifting the very landscape of how knowledge and creativity are produced. It's automating cognitive tasks that, until now, were exclusively human.
That's more fundamental.
Much more fundamental. Research suggests it's nearly twice as disruptive as traditional AI. It's radically lowering entry barriers for new players, especially in knowledge-based industries.
And the speed.
The speed is just unprecedented. It's exponential, way faster than past shifts. Kodak's decline, remember, unfolded over more than a decade.
Right.
With AI, that timeline for adaptation is incredibly compressed. It makes the challenge even more intense for businesses today.
So connecting this to the bigger picture, AI isn't just changing the how and where.
No. It's impacting the who, the human experts, and the what, the cognitive tasks themselves.
Yeah.
Think about it. A digital camera changed how you took a photo, but a human still composed it, right?
Uh,
AI, in contrast, can now create the image itself.
right.
This means AI can make core human-led processes in existing business models basically obsolete. That has profound impacts on labor, talent development, the very definition of value in a company.
So the million-dollar question then,
Hmm.
who are the potential Kodaks of this AI era?
Mhm.
Which industries are most vulnerable?
Well, research is pointing away from just manufacturing or low-skill jobs this time. It's primarily knowledge-based sectors,
The longer economy.
like customer operations, marketing and sales, software engineering, R&D, finance, media, legal services.
Wow, that's a broad swath of the economy.
It is. And the most threatened business models. Those heavily reliant on human expertise for analysis, content creation, customer interaction, anywhere. Generative AI is showing powerful potential.
So consulting firms using junior analysts for research, maybe?
Yeah.
Media companies creating content.
Exactly, those kinds of models. We're already seeing risks and opportunities playing out. Take financial services. AI is already doing algorithmic trading, fraud detection, credit scoring.
Yeah.
The threat. Well, robo-advisors could replace human advisors, automation of underwriting, but the opportunity, huge. Hyper-personalized financial products, super efficient risk management.
What about media and entertainment?
Gen AI is writing scripts, making images, videos, composing music. The threat is maybe the commoditization of creative content, a huge shakeup in production.
To the opportunity.
Massively accelerated content creation, truly personalized entertainment experiences. It's a double-edged sword.
Software engineering, too, you mentioned.
Big time. AI is generating code, testing it, debugging it. Threatens entry-level coding jobs, maybe smaller teams needed. But the upside, potentially 10x developer productivity, rapid prototyping like never before.
And consulting.
AI doing data analysis, industry research, report generation, that threatens those billable analyst tasks. Could see smaller AI-driven firms emerge.
But the opportunity for human consultants.
Shift focus to higher-level strategy, implementation, helping clients actually use the insights AI provides, delivering value at unprecedented speed.
Okay, let's tie this back directly to Kodak again. Are we seeing that same innovator's dilemma play out with AI?
Oh, absolutely. You can see the echoes clearly. Think about a company like Google, their potential hesitation to fully embrace AI-driven search. Well, what's the impact on their hugely profitable advertising business?
It's that exact same fear of cannibalization, isn't it?
It really mirrors the Kodak dilemma.
Yeah.
And you also have plain old organizational inertia.
Right. Big companies, legacy systems.
Deep-seated departmental silos, rigid processes. They all create huge friction when you try to adopt something cross-functional like AI. Classic roadblock.
And AI brings baggage the digital camera didn't have.
Exactly. Significant anxieties about mass job displacement, ethical concerns about bias, fairness, real practical challenges around trust and reliability, too.
So leaders might be overly cautious, almost paralyzed.
It can lead to that, yeah. Excessive caution bordering on paralysis, just like we saw with Kodak.
And the ROI trap.
Still a big one. Just like early digital cameras seemed low profit, many initial AI applications might not show a clear, immediate ROI compared to existing ways of doing things.
The good managers, focusing on the numbers.
Might underinvest. They fall into the exact same trap Kodak's leadership did. It's uncanny, really.
Okay, so given all that, what's the playbook for the AI era? How do we actually learn from Kodak's failure and move beyond just survival? How do we cultivate proactive adaptation?
Well, a really insightful starting point is the Boston Consulting Group's 10-20-70 rule for AI transformation.
10-20-70. What's that breakdown?
It's 10% algorithms, 20% technology and data, and a crucial 70% focused on people and processes.
70%. So it's mostly about the human and organizational side, not just the tech.
Exactly. It directly challenges that tech-centric view and just underscores how vital cultural and organizational change really is.
So the key cultural lesson from Kodak is avoiding that optimization-only mindset.
Absolutely. The danger is just tweaking around the edges. Organizations need a fundamental shift towards experimentation, continuous learning, creating psychological safety.
Where it's okay to fail sometimes.
Yes, where failing in the pursuit of innovation isn't punished. That's critical.
And the leader's role in driving that.
Indispensable. Leaders have to be the chief advocates for this change. Make it a clear, must-win aspect of the business. That means clear communication, setting a bold vision, and actually allocating resources to these transformative projects, even if the short-term ROI isn't immediately obvious.
Okay, let's get practical. You mentioned BCG's deploy, reshape, invent model. How does that work?
It's a great framework to manage AI adoption without getting overwhelmed. You start with deploy.
Deploy, okay.
This means beginning with low-risk, high-impact AI applications, things that boost productivity, efficiency, in existing functions.
Like a customer service chatbot, maybe.
Mhm.
Or automating some finance reports.
Exactly. The goal here is to build momentum, show some quick wins, demonstrate value, and just get the organization more comfortable with the technology, build confidence.
Okay, so deploy first, then what?
Then you reshape. This is where you use AI to fundamentally re-architect entire critical functions end to end.
So not just tweaking, but rebuilding.
Right. It's not minor process improvement. It's fundamental recreation with AI baked in at the core. Like creating an AI-powered supply chain control tower for total visibility, or giving your sales team AI assistance with real-time insights that transform how they sell.
Got it. Deploy, reshape, and the last step.
The ultimate goal: invent. This is leveraging AI to create entirely new business models, new products, new revenue streams that were just impossible before.
Moving beyond efficiency to true innovation.
Exactly.
Yeah.
This is the most ambitious step. Think about that logistics firm example again. Deploy predictive maintenance, reshape routing with AI, and then invent a whole new business, like AI-powered autonomous delivery services. It provides a clear path.
That makes sense. And you mentioned Fujifilm earlier. Their transformation sounds like a blueprint for this kind of thinking.
It really is a direct prototype for companies today. The core lesson from Fujifilm is look way beyond your current products. Ask yourselves, what are our unique fundamental capabilities?
So not just what do we sell, but what are we actually good at?
Precisely. Could be proprietary data you have, specialized process knowledge, unique customer relationships, deep domain expertise. What's your secret sauce?
Okay. And then the strategic question for the AI era becomes,
How can AI empower those core capabilities to create value in new or adjacent markets? That flips the whole perspective. AI isn't just an efficiency tool for the current business, it's an engine for building the business of the future.
and what's fascinating here, you said Fujifilm's shift needed deep human insight to connect film chemistry to cosmetics.
Right. That was human ingenuity.
But AI could actually help with that connection now.
It could dramatically accelerate and scale that process.
Wow.
Imagine training an AI on your company's entire patent portfolio, all your research papers, process docs, then tasking it to find non-obvious connections and potential applications in totally different industries, maybe cross-referencing with market trend data.
So AI acts as a kind of competency translator.
Exactly, a competency translator, helping identify diversification opportunities that human leaders might completely miss. It's a powerful idea.
Of course, with great power comes new risks. AI isn't without its challenges.
Definitely not. You've got unique risks demanding new governance models, things like inaccuracies, AI hallucinations.
Or just make stuff up, basically.
Plausible but incorrect information, yeah. Algorithmic bias is a huge one. Data privacy, data leakage concerns, cybersecurity vulnerabilities. It's a whole new landscape of risk.
So robust AI governance is non-negotiable.
Absolutely essential. You need things like a cross-functional AI ethics and risk committee to navigate the tricky stuff. You need human-in-the-loop processes for critical decisions to mitigate errors and bias.
Keep people involved.
Yes. Define clear policies on data use, how employees interact with public AI tools, and invest heavily in explainability and transparency so you can actually understand and trust the AI-driven outcomes. You can't just have a black box making critical decisions.
Right. Okay, so bringing it all together.
Yeah.
What's the main takeaway from Kodak's story for today?
I think the central argument is this. Kodak's fate wasn't just sealed by some disruptive technology appearing out of nowhere. It was ultimately sealed by a leadership team that lacked strategic vision, that lacked the courage to reinvent itself.
Their Kodak moment was, in the end, a choice they made.
It really was. And today, you, our listener, you're standing at the precipice of your own AI moment. It's not just a threat to be feared. It's truly a once-in-a-generation opportunity to recreate organizations, redefine entire industries, and actually build the future.
So the choice before everyone listening is basically the same one Kodak and Fujifilm faced.
It is. Adapt or eventually obsolesce. So the final thought for you is, what will you choose for your AI moment?